You're sitting at a red light and the guy in the car next to you is intensely listening to a finance podcast. You get to the office and your coworker, who you were pretty sure still has credit card debt from Christmas of 2024, is breathlessly talking about how he's going to liquidate his 401k this summer. You open Twitter or X or whatever we're calling it today, and your entire feed is an absolute avalanche of rocket emojis, dollar signs, and the same screaming headline. SpaceX confidentially files for record-breaking $1.75 trillion IPO. The hype is suffocating. The news anchors are calling it the biggest wealth creation event in modern history. They are saying the merger with XAI and the dominance of Starlink mean this stock is going to Mars before the rockets even get there. And as you sit there calculating how much a gallon of milk costs this week because of the oil shocks, you feel that familiar, desperate itch of FOMO, the fear of missing out. You think, this is it. This is the one. If I can just get a few shares of SpaceX on the day it goes public, I'll finally catch up. I'll ride the Elon Musk wave to retirement. It's Karen again. Money, behavior, and the traps they lay for us, those are my rabbit holes. And honestly, watching the middle class gear up to throw their emergency funds into the most hyped initial public offering of the decade makes me want to scream. Because you aren't getting in on the ground floor. The ground floor was 20 years ago. You are being invited to the penthouse to buy the bags that the billionaires are trying to drop. Today, we have to talk about the brutal, unsugar-coated mechanics of the SpaceX IPO. We are going to look at the terrifying $1.75 trillion valuation, expose the exit liquidity trap that Wall Street is setting for retail investors, and break down exactly why buying a hyped stock on opening day is almost always financial suicide. If you are thinking about moving your hard-earned cash into the space race this June, put down your phone. We need to do some math first. To understand why you're about to get played, we have to strip away the romance of space travel and look at the actual plumbing of an initial public offering. When you hear IPO, the media makes it sound like a company is throwing a massive party and inviting the public to come share on the profits. They make it sound like a democratic wealth-building event. It is exactly the opposite. An IPO is a cashing out event. Let's trace the timeline of SpaceX. Elon Musk founded this company in 2002. For the last 24 years, who has been funding it? Venture capitalists, elite private equity firms, massive institutional banks, early employees. These people bought into SpaceX when it was valued at a few $1 billion or $50 billion or even $100 billion. Their money is completely trapped inside the company. They are holding pieces of paper that say they are billionaires, but they cannot go to the grocery store and pay for an apple with a SpaceX certificate. They need liquid cash, but they cannot sell their shares because the company is private. The only way for those early investors to turn their paper wealth into actual spendable cash is to take the company public. They take it to the stock market, they list the shares, and they sell them. But for someone to sell a share, someone else has to buy it. Enter you, the retail investor. You are the exit liquidity. The massive $75 billion that SpaceX is trying to raise in this IPO, a huge chunk of that isn't going toward building new rockets to go to Mars. It is going directly into the bank accounts of the venture capitalists who have been waiting 2 decades to get paid. When you log into your Robinhood or Fidelity account on IPO day and frantically hit the buy button at $150 a share, you are literally handing your hard-earned cash to a venture capital firm that bought that exact same share for $5 a decade ago. You aren't investing in a startup. You are buying the top of a 2-decade-long private market bull run. You are paying the absolute premium price so that early investors can buy their third yachts. Now let's talk about the price tag, because the numbers being thrown around right now are absolutely staggering and they defy all gravity. The leaked filings suggest that SpaceX is targeting a valuation of roughly $1.5 to $1.75 trillion. Do you comprehend how large a trillion is? At $1.75 trillion, SpaceX would instantly become one of the most valuable companies on planet Earth. It would be larger than Amazon was just a few years ago. To justify a valuation that high, the stock market demands massive,
undeniable, consistent revenue and profit. Wall Street analysts are justifying this price by doing what is called a sum of the parts analysis. They are looking at the rocket launch business. They are looking at the Starlink satellite internet revenue, which is impressive to be fair. And they are looking at the recent, highly controversial merger with XAI. They are mashing all those speculative futures together and saying, yes, this is worth nearly $2 trillion. But here is the trap of buying a company that is already priced at $1.75 trillion on day one. It is priced for absolute perfection. Every single thing Elon Musk has promised must happen flawlessly. Starship has to work perfectly. Starlink has to double its subscriber base. The XAI orbital data centers have to revolutionize computing. If any of those things hit a snag, if a Starship explodes on the pad, if a competitor launches a better satellite network, if the AI bubble bursts, the valuation collapses. When you buy a company that is already valued at nearly $2 trillion, you have virtually no margin of safety. You are buying all the hype, all the promises, and all the future growth up front. Think about the math of a return on investment. If you buy a company valued at $10 billion, it only has to grow to $20 billion for you to double your money. That is entirely possible. For you to double your money on the SpaceX IPO, the company has to grow from $1.75 trillion to $3.5 trillion. It has to become larger than Microsoft and Apple. Is it possible? Maybe, but you are taking on an astronomical amount of risk for a highly limited, extremely difficult upside. If the math doesn't make sense, why is the hype so deafening? Because you aren't buying a balance sheet. You are buying the Musk premium. Wall Street knows that Elon Musk is the ultimate hype engine. They watched what happened with Tesla. Tesla traded for years at a valuation that made absolutely no mathematical sense based on how many cars they actually sold. It traded on the sheer force of personality, the cult of innovation, and the retail investors' desperate desire to believe in the future. The investment bankers underwriting the SpaceX IPO are counting on that exact same phenomenon. They are weaponizing the Musk premium to set the highest possible IPO price. But here is the danger of buying a stock based on personality. It is wildly, violently volatile. When a stock's price is untethered from its actual boring quarter-to-quarter cash flow, it trades entirely on sentiment, and sentiment changes with a single tweet. If Musk gets into a massive political feud, the stock drops. If he promises a timeline for a Mars launch and misses it by 3 years, the stock drops. Furthermore, when you buy SpaceX, you are taking on key man risk multiplied by 5. Musk is running SpaceX, XAI, Tesla, Neuralink, and X simultaneously. If he gets distracted or sick or decides he is bored with space and wants to focus entirely on brain implants, the nearly $2 trillion valuation of SpaceX gets instantly shattered. When you buy into the Musk premium, you aren't investing, you are paying a volatility tax. You are strapping your retirement account to the mood swings of a billionaire. Let's assume you ignore everything I just said. Let's assume you buy the stock on opening day. You get in at $150 a share. For the first few weeks, it looks great. The media is hyperventilating, retail investors are pouring in, the stock climbs to $180. You feel like a genius. You take a screenshot of your brokerage app and send it to your brother-in-law. You need to look at the calendar because a time bomb is ticking, and it usually detonates exactly 180 days after the IPO. It is called the lockup expiration. When a company goes public, the insiders, the executives, the early employees, and the massive venture capitalists are usually legally forbidden from selling their shares for the first 6 months. The banks force this rule so the insiders don't dump all their stock on day one and instantly crash the price. So for the first 6 months, the supply of shares available to trade on the open market is artificially low. Low supply plus high retail demand equals an artificially high stock price. But on day 181, the lockup expires. Suddenly, millions and millions of shares held by early investors are legally allowed to be sold. And remember, these people bought their shares for pennies on the dollar years ago. They do not care if the stock drops from $180 to $140. They are still making a 10,000% profit. They flood the market with sell orders, the supply of shares violently outweighs the demand, and the stock price plummets. This happens in almost every major overhyped tech IPO. Look at the historical charts of massive IPOs from the last decade. They spike in the first month, fueled by retail FOMO, and they almost universally crash in month 6 when the insiders finally cash out. If you buy on IPO day, you are literally just holding the door open so the billionaires can run out with the money 6 months later. There is one more highly technical, incredibly important detail hidden in the SpaceX IPO filings that you absolutely must understand before you hand them a single dollar. It is the dual-class share structure. When a company goes public, one share of stock equals one vote. If you buy a share, you own a tiny fraction of the company, and you have a tiny fraction of a say in how the company is run. If the CEO does a terrible job, the shareholders can vote to fire the CEO. That is the fundamental accountability of the public markets. SpaceX is not doing that. To maintain absolute control over his empire, Musk is expected to utilize a dual-class or even a multi-class share structure. This means that the shares they sell to you, the retail investor, might carry 0 voting rights, or maybe 1/10 of a voting right. Meanwhile, the special Class B shares held by Musk and the insiders carry 10 or 100 votes per share. What does this mean for you? It means you are handing over your money, taking on all the financial risk, but you are buying absolutely 0 influence. You are not a true owner, you are a passenger. If Musk decides next year that he wants to take the billions of dollars of cash generated by Starlink and burn it in a massive crater in Texas for an experimental rocket that has a 1% chance of working, you cannot stop him. You cannot vote against the board. Wall Street cannot force a change in management. You are funding a dictatorship. You are giving a billionaire your capital without receiving the legal protections and voting rights that traditional public markets were designed to provide. You are absorbing the risk of the public market while the CEO retains the absolute authority of the private market.
Okay, so I have absolutely dragged the idea of buying the SpaceX IPO. I've told you it's a trap, it's overpriced, and the insiders are going to dump on you. But you still want to make money, right? You see the space economy booming, you see the AI integration, and you want a piece of it. How do you participate without becoming exit liquidity? You execute the ultimate CFO defense. You buy the boring picks and shovels. During the gold rush in the 1800s, the people who actually got rich weren't the prospectors desperately panning for gold in the rivers. The people who got rich were the guys selling the shovels, the pickaxes, and the blue jeans to the prospectors. You do not buy the hyperinflated $1.75 trillion rocket company. You buy the boring, profitable companies that the rocket company is forced to buy from. SpaceX requires massive amounts of raw materials, specialized aerospace components, high-grade semiconductor chips for XAI, and advanced manufacturing equipment. Who makes those things? Publicly traded, deeply boring, highly profitable industrial and technology companies. If you want exposure to the space economy and the AI boom, you look for the established aerospace and defense contractors. You look at the semiconductor manufacturers. You look at the companies providing the physical infrastructure for data centers. These companies are not glamorous. They do not have cult followings on Twitter. They trade at rational valuations based on actual cash flow. They pay consistent dividends. And if a Starship explodes on the launch pad, their stock doesn't crash 20% in an hour. You let the Robinhood traders gamble their life savings on the SpaceX ticker symbol. You sit quietly in the background investing in the unsexy supply chain that makes the rockets fly. I know the FOMO is powerful. I know how badly it hurts to feel like you are falling behind in this economy, and how tempting it is to view a massive IPO as a lottery ticket that will finally fix your budget. The financial media and the investment banks spend billions of dollars perfectly engineering that exact feeling. They want you desperate. They want you greedy. Because when you are greedy, you don't read the SEC filings. You don't look at the lockup expiration dates. You don't question a $1.75 trillion valuation. You just click buy. I need you to step back and look at the board. You are the middle class. Your capital is precious. You cannot afford to lose 30% of your savings in a 6-month lockup dump because you wanted to feel like you were part of the space race. SpaceX is an incredible company. What they have done for aerospace engineering is genuinely historic. But an incredible company does not automatically equal a good stock investment at any price. The insiders have been eating a 20-year feast, and they are finally handing you the check. Refuse to pay it. Ignore the hype, let the billionaires trade shares with the hedge funds, take your hard-earned money, protect it from the geopolitical chaos, and deploy it quietly into boring, rational, broad market assets. The only way to win the IPO game is to refuse to play. You can do this. I'll see you in the next one.